Going further, second main topic in the chapter is, like I showed you here, within value chain analysis, we are going to learn framework for value chain analysis. Framework basically explains that how are you going to do that value chain analysis, how to do the value chain analysis. Well, in order to analyze the value chain of my company, in order to do analysis of activities in my company, I need to analyze the three things. Number one, I need to analyze the entire industry in which I'm operating. That is called as industry structure analysis. I need to analyze my own core competency, and I need to analyze segmentation in my company. Well, these three types of analysis are involved. Out of these three analysis, industry structure analysis is basically about analyzing external things, while core competency and segmentation analysis, both of them are analyzing internal things. So let us understand what is industry structure analysis. Well, industry structure analysis means to analyze the entire external industry in which I am operating, or maybe to analyze the external industry in which I am planning to enter. See, when do you analyze the industry? Industry means all companies selling similar product. So when do you analyze the overall industry of this particular product? Well, you will analyze the overall industry when you are probably planning to now enter that industry. So keep that in mind. Industry structure analysis is done when you are trying to enter a new industry. So while entering a new industry, what should you keep in mind? Like what did Jio, what did Reliance do while entering the telecom industry in India? Yeah, what did say for example MG Motors do while entering the automobiles industry of India? Yeah, they must have done some analysis of the industry. What did say for example Apple? What did Apple do before entering the mobile phone industry in India? Right, so they must have done some analysis of the industry before entering that industry. That is called as industry structure analysis. Basically under this analysis you just have to study Porter's 5 forces. These 5 forces are basically in simple words I can say these are 5 external threats that can decrease my profitability. Yeah, 5 external threats that can decrease my profit, or that can decrease my profit potential. Let's see what are these 5 forces. The 5 forces that can decrease my profit, forces that determine profit potential of my company in the industry, or threats that can decrease my profit potential in the industry. Threats, see, I'm using the word threat because each of the 5 forces that determine the profit are the forces that can decrease my profit, forces that can decrease my profit. Now because these forces can decrease my profit, so I am calling them as threat, right? Let's see. Number one, bargaining power of the buyer. Well, the industry in which I am operating, if the buyer has a huge bargaining power, don't you think that will lead to less profit for the company? Yeah, this is exactly what is happening in the edutech sector of India. Yeah, these video lectures that you are getting, well, nowadays you are getting video lectures at such a less price. Probably many faculties are also giving video lectures free on YouTube. Yeah, so the buyer has more bargaining power. In that case, if the buyer has more bargaining power, then there is less potential of earning profit in this industry, right? Bargaining power of my supplier. Well, my supplier means those companies which provide raw material to me. Yeah, so if the company which is providing me raw material, if that company has huge bargaining power, then they will bargain a very high price for the material. I don't have bargaining power. I will have to pay more bargaining. I will have to pay more price for the material, due to which my profit can go down, right? Third, threat of substitutes. If this industry has a lot of threat about substitute products, if there is lots of substitutes available, and the customers are aware of those substitutes, then again my potential of earning profit will be less. Threat of new entrant. It is easy to enter this industry, then again my potential for earning profit will be less. And intensity of competition. Out of the existing people in this industry, out of the existing companies like me in this industry, if there is very intense competition among us, then again potential of earning profit will be less, right? So you understand that each of these five forces is a threat to my profit. Well, you need to understand that how these forces are a threat to my profit, but more importantly, you need to understand that when will these threat exist. When does this threat exist? You need to understand that what are the situations when this threat can exist. Like, when will the buyer have more bargaining power? When will the supplier have more bargaining power? When will I say that there are threat of substitutes existing? When will the threat of new entry be there? When will the intensity of competition be more? That's what we need to understand. Again, regarding this topic, there might be case studies. How the case studies will come and how you answer case studies, I'll tell you. Before that, let us understand this when part more important. So imagine you understand that if my buyer has more bargaining power, then my profit potential will decrease. But when does my buyer have more bargaining power? In which situation will the buyer have more bargaining power? The buyer will have more bargaining power if there are less number of buyers. Imagine the product which I am selling. If there are anyways very few buyers of that product, if there are anyways less number of buyers, then can I say buyer will have more bargaining power? Yeah, because there are very few buyers and lots of suppliers. There are many sellers like me, but the buyers are very few. So all the suppliers will be competing to sell for that buyer. There will not be competition among the buyers, will be competition among the sellers to sell it to this one buyer. So the buyer will have more bargaining power. It is like buyer is having a monopoly. Yeah, generally seller has a monopoly, but no, here maybe the buyers are having a monopoly. There are very few buyers and large number of suppliers. Then the buyer will have more bargaining power, right? Or if the cost of switching is less, then again buyer will have more bargaining power. Best example, I'll tell you. Um, few years back in India, if I want to change my mobile operator, it was not very easy. Why? Because if I change my mobile operator, say I want to change from Airtel to Vodafone. If I want to change from Airtel to Vodafone, then it was not very easy, because if I change, then my mobile number will change. And if my number will change, then so many places where I have given my number will change, right? So many people will not be able to contact me any longer. But I don't want that, so I will stick to Airtel. No matter how much price Airtel will charge, I will still stick to Airtel, because I cannot afford changing my mobile number. But now the story is different. Why? Because now, nowadays you have the facility of MNP. I hope you know what is MNP, mobile number portability. Mobile number portability means that I can change my mobile number. I can change my mobile operator without changing the mobile number. Yeah. So now if I can change operator without changing my number, don't you think this makes my cost of switching very less? Yeah, now my cost of switching is very less. I can easily switch from Airtel to Jio Telecom. Now because my cost of switching is less, so the buyer has more bargaining power. The moment Airtel will increase the prices, I will switch to Jio. If Jio increases the prices, I will switch to Vodafone. If Vodafone increases the price, I'll switch to BSNL. Well, if BSNL increases the price, I can switch back to Airtel. I can keep switching without changing my phone number. Yeah. So because of that, the buyer has more bargaining power. In fact, I'll tell you a story. I have done this actually. See, I'm running on an Airtel subscription. I'm running on an Airtel postpaid plan. Well, my Airtel postpaid is almost, I think, 12 years old plan. 12 years old connection that I'm having, and the plan which I have got is also almost, I think, 8 to 10 years old postpaid plan. Now that plan is already discontinued by the company since many years. They gave me a call that, sir, you switch over to a new plan because the old plan is getting discontinued. I was lazy, I did not switch over to new plan. Well, you know the fact, if the company launches new plans, they cannot shut down the old plan. If they are shutting down the old plan, then they will have to switch me from old plan to new plan without any extra charges. So right now I am getting all benefits of the latest Airtel postpaid plan, but I'm getting it at the price of my original plan which I used to have. Yeah, one day Airtel people called me and told me that, sir, this plan is getting discontinued, so you need to switch over to the new plan. I said that no, the new plan is very expensive, I don't want to switch over. Yeah, I told that new plan is very expensive, I don't want to switch over. Then that guy started telling me that, sir, if you don't switch over, then your plan will discontinue, your phone will stop working and all. He started telling me that they will disconnect my phone. Now, the moment they told me that they will disconnect my phone, I told them that, okay, if that is the case, then you tell me the procedure for MNP. I just told that guy on the phone that you tell me the procedure for mobile number portability. The moment I told them that you tell me the procedure for MNP, वो पिघल गया. That guy started making excuses that, no, sir, please don't leave. Please don't leave. We will continue this plan for you. Now, what is that? That is bargaining power of the buyer. Yeah, that is exactly bargaining power of the buyer. I bargained with them. I actually bargained with them to give me that old plan, at the old rate. Yes, so because of mobile number portability, the cost of switching is less, and because cost of switching is less, buyer will have more bargaining power, so the profit potential of the company will be less, right? Second, bargaining power of the supplier. Now imagine, when will the supplier have more bargaining power? Now when I say supplier, it means the company which is supplying raw materials to me. Let's say if I'm manufacturing these pencils, then my buyer will be the stationery shops. My buyer are the stationery shops who will buy pencils from me. My buyer are the students who will buy pencils from me. Yeah, but my supplier is whom? My supplier is the company which supplies the plastic raw material to me. My supplier is the company which supplies the rubber raw material to me. My supplier is the company which is supplying the inside lead to me, right? Let's say the company which is supplying the plastic to make the body, that is the supplier. If the plastic that I purchase is, say, from Reliance Industries Limited, if Reliance is supplying that plastic to me, definitely Reliance will have more bargaining power because it is a huge big company. My company is a very small company. Reliance is a big company. Definitely he will have more bargaining power, right? So when does the supplier have more bargaining power? Well, certain situations, let me tell you. If the material is very important to my company, if the plastic which I'm using to make this pencil is a very important material, it is the most important part of my product. If the plastic is the most important part of my product, then definitely supplier will have more bargaining power, right? Because the supplier knows that the material which he is giving to me is a very important material, right? So if the material is very important to the company, then the supplier will have more bargaining power. Simple example, you people are CA students, you are doing CA, right? And we are providing a coaching to you. Yeah, so we are providing a coaching to you. I am providing a classes to you. You are studying. So the classes that I am providing to you is your material. It is input for your company, right? It is input for your career. Now your career has two inputs. You are doing CA. You're also doing, say, for example, BCom, right? Which is more important input in your career? You're doing CA, you're doing BCom, which is more important input in your career? Naturally, I will say that CA is more important input in your career. BCom is not very important, right? Now, if CA is more important input for your career, because of that, don't you think that as a CA coaching faculty, I will have more bargaining power over you? Another BCom coaching faculty does not have more bargaining power over you. Yeah, say I'm running CA coaching classes, my friend is running BCom classes. Whom will you be ready to pay more fees? If I charge you more fees, you will have to pay. If the BCom classes charges you more fees, probably you will not pay, because that BCom classes is not very important input for your career. But CA coaching is an important input for your career. You might be ready to pay more fees. Yeah, this means that when your input is more important, if your input is more important, then supplier will get more bargaining power. I hope that example explains much to you. See, this is how we are going to learn theory. We will be learning a theory of your entire syllabus using lots and lots of examples like this, right? So theories that we will be learning with lots of examples like this to understand all the theory in a better way, right? So if the material is important, then the supplier will have more bargaining power. Or if there are less number of suppliers, if there are very few suppliers who are supplying that product, then again supplier will have more bargaining power, right? You are getting material from a supplier, but there is only this one supplier who is available, so there is a supplier monopoly. If there is a supplier monopoly, then you will have to pay whatever price he charges. Yeah, supplier will have more bargaining power in that case. Or if there is no alternate input, the input which you are getting from the supplier, in fact that input is important to you because there is no alternative to that input. If there is no alternative to that input, then again the supplier of that input will have more bargaining power. Yeah, see, these are the situations when supplier will have more bargaining power. In fact, you know why am I discussing these situations? Because these are the situations which you will see in the case studies. Yeah, these are the situations which will actually appear in the case studies. And for answering a case study questions, you need to identify such examples given in the case, and based on that decide that whether a supplier has more bargaining power or not. And see, that's the reason why these factors are important. In fact, we discussed that when does buyer have more bargaining power? These are the examples. When does supplier have more bargaining power? These are the examples. And you know, these examples can even interchange with each other. I'll tell you. Say, my buyer will have more bargaining power if the number of buyers are less. Well, similarly, if the number of suppliers are less, then supplier will have more bargaining power. You see, how does this point relate with this point here? Yeah. Second, if the cost of switching is less, if the cost of switching is less to my customer, then my customer will have more bargaining power, right? But if my cost of changing supplier is less, if my cost of changing supplier is less, then I will easily change a supplier. Then my supplier has less bargaining power. Now let me put it other way around. For me, if it is very expensive to change a supplier, for me, if it is very expensive to change supplier, then my supplier will have more bargaining power, right? Yeah, I'll tell you example. Say term insurance. If I buy term insurance from, say, ICICI Insurance, if I buy term plan insurance from ICICI Insurance, then after buying that term insurance, the cost of switching supplier is very high. Why very high? Because say I purchased insurance at the age of 25. I had purchased that insurance. I started that insurance when I was 25 years old. Today I'm 36 years old. Right. So now if I switch the supplier, if I buy new insurance, then the insurance premium will be very high. Because insurance premium will increase with the age of the person. So at 25 years of age, I got 1 crore insurance at, say, for example, 15,000 rupees. Today, if I go for 1 crore insurance, it will cost me at least 20,000 rupees. Yeah. So my cost of changing a supplier is now very high. I will not change the supplier. Yes. So within supplier also, when will the supplier have more bargaining power? Supplier will have more bargaining power if cost of switching the supplier is more. You see, how does this point opposite become point for this, right? Similarly, if the material is important for me, then my supplier has more bargaining power. However, if the finished goods which I am giving to my customer is not important for the customer, the goods which I am giving to the customer, if that goods given to the customer is not important for that customer, then customer will have more bargaining power. Yeah, you see how this point opposite becomes point for the buyer. Yep. In short, there can be internally the points can change, switch over for that you should be able to understand. In fact, if you want, I can mention that over here, which can help you probably. If the finished goods are less important for the buyer, then buyer will have more bargaining power. He doesn't care because the goods which I am giving to him is not very important to him. Right? So if I increase the price, he can stop using those goods. And over here I can add one point, that if cost of switching supplier is very high, if the cost of changing the supplier is very high, then you will not change the supplier. Even if the supplier charges more price, you will not change the supplier. This means supplier has got more bargaining power. Right? See, these factors that I have given here are really very important. I hope you understand why are these factors important. Because when we will see the case study, within the case study, these are the factors which you will see in the case study. Yeah, let me tell you how to answer the case studies here. Very easy. Chalo. Here also, when you answer the case studies, your guidelines remain the same. These are the guidelines for answering a case studies. Same guidelines. When you are given a case study about Porter's 5 forces, number one, you explain a basic theory. What is 5 forces and all? You explain that the 5 forces are a part of framework to do value chain analysis. So in fact, you begin your answer by describing what is value chain analysis. Yeah, say that under value chain analysis, you need to analyze value added, non-value added activities, eliminate the non-value added activities. So this description, yes, you have to write. That is a part of basic theory. Then you write that in order to do value chain analysis, the company needs to analyze the three things. The company needs to analyze industry, core competency, and the company needs to analyze segmentation. Within that, the first analysis is the industry analysis, under which you analyze the 5 forces that are the 5 external threats which can decrease your profit. This is your introduction. Now, under that, you explain each point. So you explain each of the 5 forces. You explain what is each force. You explain that how does this force decrease your profit, and then you give examples. Examples meaning first you give general examples that generally when does buyer have more bargaining power, and then you give specific examples that in this company do you think that the buyer has more bargaining power or not? And if yes, then you give examples that in this company, why do you think buyer has more bargaining power? In this company, do you have less number of buyers? In this company, is the cost of switching very less? In this company, are the finished goods less important to the buyer? Find out that from the details of the case, and that will become your specific examples. Don't worry, I will show you. We will practice one such case study in class later today, right? Further, Further, threat of substitute products or services. Well, if there are substitute products available in the market and the customer is aware of those substitutes, then it becomes a threat to my company. It can decrease my profit. See, there are two things. Just because a threat is available does not mean it is a does not just because substitute is available does not mean it is a threat. The substitute should be available and the customer should be aware that a substitute is available. See, these are two different things. There are so many situations where substitute is available but the customer is not even aware that substitute is available. If the customer is not aware, then customer will be ready to pay high price. You know what happens in case of medicines? So many customers are not aware that whatever medicine you buy from a pharmacy, well, that same medicine can be available from a generic pharmacy store at probably half the price, maybe even less than half the price. Yeah, generic medicines. There are stores which sell you generic medicines. So instead of buying medicines of a reputed brand, same medicine you buy, but it is produced by some local brand, right? Anyway, so just because there is a substitute does not mean it is a threat. The substitute should be available and the customer should be aware of that substitute. So when will the threat of substitute be more? Well, the threat of substitute is more if substitutes are available and customer is aware of it. And customer knows that substitutes are available. Also the threat of substitute will be more if the brand loyalty is less. A clear example I'll tell you. Does say for example, does a mobile phone brand like Oppo, Vivo become a threat to Apple? Does it become a threat to company like Apple? No, because company like Apple is enjoying tremendous brand loyalty. A person who is buying iPhone, a person who buys Apple iPhone will always buy an Apple iPhone. Yeah, so no matter how much price Apple will charge for their phones, the person will be ready to sell a kidney and buy an iPhone. You might have seen those memes nowadays, right? So just a joke, but yeah, customer will be ready to buy iPhone because of the brand loyalty. So even if they charge more, you are still ready to buy an iPhone. Yeah, so does the Apple company find Oppo, Vivo and all these Chinese brands as a threat? No, these Chinese brands are not a threat for Apple company because Apple company enjoys huge brand loyalty. But do you think Samsung is enjoying such brand loyalty? Well, not as much as Apple. Or in fact, do these Chinese companies internally enjoy such brand loyalty? No. If today you are using an MI phone, and tomorrow if Oppo comes up with a much better phone, then you might easily switch from MI phone to Oppo phone. If Vivo comes up with a better phone, you might easily switch from MI phone to say Vivo phone. Why? Because within these Chinese brands there is very less brand loyalty. Right? So if the brand loyalty is less, then the company will face the threat of substitutes, right? Threat of new entrant. Well, when will the threat of new entrant be more? The threat of new entry will be more if if the entry barriers are less. Now, what does entry barrier mean? Entry barrier, the entry barrier could be, for example, say the barrier to entry could be investment capital required. Entry barrier could be like say technology required, or say maybe legal barriers can be there. Yes, so basically in various industries there can be entry barriers. For example, today Reliance Industries Limited is into the business of petrochemical refining. Does the petrochemical refining business have major threat of new entrant? No, because in order to set up a refinery you need huge amount of capital. Everybody does not have so much capital. Mukesh Ambani does not face the threat of new entry to a very large extent. Yeah, probably Gautam Adani can set up a refinery, because in India right now, Gautam Adani is the only person who might have enough capital to set up a petrochemical refining business, right? So the threat of new entry is less. Technology requirement. Well, if your product requires huge or very complicated technology, maybe patented technology, then everybody cannot enter into that business because everybody does not have that technology, right? Everyone cannot enter into the business of, say, manufacturing weapons, because in a country like India, weapons manufacturing is under legal restriction. Everyone cannot start practicing as a chartered accountant because legal barriers are there. You need to be a qualified chartered accountant, a practicing chartered accountant, and you have to pay the membership fees regularly in order to be listed as a member of the CA Institute. Then only you can practice as a chartered accountant, right? That is called your legal barriers. In short, all these are the threat of, all these are the entry barriers. If the entry barrier is less, then there can be threat of new entrants, right? Within our CA industry, I'll tell you, as a CA, for a CA industry, for a practicing CA, signing audit reports, signing audit reports, the entry barrier is high because only qualified chartered accountants can sign audit reports. But filing IT returns, the entry barrier is less because in order to file tax returns, you're not necessarily supposed to be a chartered accountant. Yeah, even tax practitioners can file IT returns from you. Even the individual himself can file his own IT returns. Yeah. So for tax filings, entry barrier is less, but for audit filings, entry barrier is more. So depending on the nature of business, you need to know that whether your entry barrier is more or less. If the entry barrier is less, then there is threat of new entrant. And intensity of competition. Intensity of competition means that whatever companies are there in the industry, how much intense competition exists among them. Well, the intensity of competition will be more intensity of competition will be more if, say, if all the companies in the industry are of similar size. Imagine if all the companies in the industry are of similar size, then there will be more intense competition among them. Imagine out of all the companies in the industry, if one company is having 90% market share and remaining all companies are having just 10% market share, then there is no intense competition. Imagine there are 10 companies in that industry. One company is enjoying 90% market share. Remaining 9 companies together are getting only 10% market share. So in such industry, there will not be very intense competition. Why? Because this one company who enjoys 90% share doesn't consider the remaining 9 as competition because वो सब बच्चे हैं. And the remaining 9 do not have intense competition among them because the remaining 9 are busy trying to beat that one big player. You understand that? Yeah. So the intensity of competition will be less in that case. Intensity will be more. Intensity will be more if, say, there is overproduction in the industry. If there is excessive production in the industry, so there is excessive supply in the industry, so every supplier is trying to sell his product. Every supplier will try to sell his product. There will be oversupply and there will be intense competition in the industry, right? um, Anyways, or there will be more competition if there are more exit barriers. There are situations when a company cannot exit a particular industry easily. Imagine if the company has started doing this business after doing huge amount of investment, then the company will not be easily going to exit that business because they have done investment, so they will not easily exit that industry. So there will be more exit barrier, so more intensity of competition, right? Anyway, so these are the situations under which the five forces will come into play. The most important part of these five forces is to understand that when do these forces exist. This when part that I have written here is the important part that will help you answer the case studies.